This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the data sets, the earnings, and doing a technical analysis of the SPY. I'll be trying to get to the treasuries and the overall market. However, it is quite late right now when I'm recording this. So with that said, I will try to cover as much as I can. Um, I will be live streaming this entire week from 8 a.m. to 9:30 a.m. Eastern Standard Time. I know my streaming schedule the last week has been a little choppy, but I am trying to work on keeping that consistent. With that said, this is for the week of February 23rd, 2026, and let's go ahead and get straight into the data. Now, this week overall, we really don't have a whole lot of data sets. So for Monday, we only have a Fed speaker, really nothing important, so really not a big data day at all. Same for Wednesday, well, except instead of a Fed speaker, we have the 5-year note auction. Again, really not super important right now. So Monday and Wednesday, not big days at all. Tuesday, we really don't have a whole ton of data sets on that day that are super important. We have two Fed speakers at 9 a.m. Not really super important, as I mentioned. And then we have the housing price index. I'm not really too focused on that right now. That's not going to move the market very much at all. At 8:15 a.m., I know this kind of is after the fact, but we have the ADP weekly employment change. Now, this has been very low. Basically, it's been at that neutral range, basically a little bit below neutral or slightly below or above neutral. Um, this should be a lot closer to 40 to 50,000, and we haven't been anywhere close to that for months now. The really big data set for Tuesday is the CB consumer confidence. Now, this is at 10 a.m. This data set has been extremely low for the last, I want to say, over 6 months now. And what I mean by that is each time we've seen this data set this low, we've generally been in a fairly large recession, or we see the economy enter into one. So, um, the CB consumer confidence is a soft data set, so it's opinion based. You have to take it with a grain of salt, but we have been seeing it extremely low. The forecast expects it to be high. They do this each and every time just because it's been pushed down so incredibly low. I don't think it'll be that 87.6%. I think it'll be very close to where it is now, if not lower. So not very good data for that. 11:30 a.m. we have the Fed GDP now. This has been pulling down quite a bit. It was all the way up at 5.4%, and now it's pulling down to 3.1%. So it doesn't really move the market too much, but it is something that bears some weight overall. With the 2-year note auction at 1 p.m. I'm not really too interested in these note auctions currently. Um, Really, overall, most of the data is not that exciting this week. On Thursday, we have the initial and continuing jobless claims. I don't really anticipate to see anything too absurd out of those. We do see the forecast expecting a higher initial jobless claims, which I definitely agree with, and that would definitely allude to a higher continuing jobless claims as well. Now for Friday, we do have some important data. We do have the PPI data. That's at 8:30 a.m. And then at 9:45 a.m., we do have the Chicago PMI. Now, overall, again, as I said, this week doesn't have a whole lot of data. For me, basically, it's this CB consumer confidence at 10 a.m. on Tuesday, and then the PPI data on Friday. The Chicago PMI, I'm not too worried about. Uh, Everything else is pretty lackluster in terms of driving any of the narrative currently. So, um, really, I'm not too interested in this week's data very much at all. Now, with that said, we do have some disruptions with the tariffs. So, as you all know, the Supreme Court has, sided against President Trump on those current tariffs. However, there's all sorts of different legislation and laws that I'm sure can be used to either continue those tariffs or implement something else. So there will be some volatility regarding that. If you remember last year, basically from January all the way to April, we were dealing with a lot of the tariff uncertainty, and that's why we saw the market drop basically over $100 in terms of just the SPY. So very, very large volatility can be stemmed from this. I feel like people have not taken this seriously enough because granted, I don't think the tariffs are going to be canceled out because I do think that there's some extra measures that can be implemented. However, if for some reason all those measures end up canceled out, or if this remains in court for a long period of time, that just adds further uncertainty. And, that can cause the market to, tip that scale into that bearish position. So, it's something to be aware of. I know that President Trump is having a speech late on Tuesday evening, so basically Wednesday morning. Um, Again, I have no clue what he's talking about then or anything else, but we just have to be prepared for kind of anything over the next few weeks. So, and again, I do want to get in the habit of showing the CME FedWatch every single Sunday. So, um, based on last week's data, even though we did have the tariffs get canceled, the rate cut for March is pretty much still almost at a 0%. Now, going out a whole year, we've seen these levels shift quite a bit. Now, as of basically a week, 2 weeks ago, we saw the odds of the interest rates being around that 2.25, 2.5% by December of 2026. That was at 4%, and while that may not seem like a lot, that is a lot because that's factoring in many, many, many rate cuts. Okay. We've seen the odds from the 2.5 to the 2.75% go all the way basically from it was closer to 20% all the way down to almost 11%. So the odds of the, you know, increased rate cuts have definitely gone out the window just a little bit. And we do have to be aware of that because that was a major factor in last year. Um, when earlier in the year we stopped having the odds of the rate cuts coming in. And when that happened, we saw that, the market was pricing in the pauses, and that started becoming more of a I really don't want to call it this, but more of a bearish catalyst rather than a bullish catalyst. So this is sort of still alluding to the fact that potentially we may not be out of the woods in terms of seeing some bearishness in the overall market. Now, with that said, I want to go ahead and jump into the earnings. We do have a very, very large earnings week this week. So that's on Wednesday. That's NVIDIA. Now, overall, we do have some very important earnings, so we'll just quickly go over it. Monday, I'm not interested in really anything. There is a earnings for HIMS. Now, HIMS has been absolutely beaten to the ground, so this could be potentially a really good opportunity. I haven't done the technical analysis on HIMS. I've been wanting to, so potentially if you're interested in that, we can talk about it in the live stream tomorrow. On Tuesday, I don't really see anything that I'm interested in. There's full solar. That's been, doing very well. On Wednesday, let's see, there's Circle. Not too interested in that right now. What else? Basically all in the after hours. So we have Nvidia. Obviously, that's the number one in the entire stock market. So everybody's going to be paying attention to that. Um, In terms of the estimates and everything overall, I'm sure there's people that have actually broken down the numbers and everything, but here's what I do know about earnings is that each and every earning has to continuously get better and better and better and better and better. Um, when's the point where Nvidia is going to hit that cap where they need to pull back a little bit before they can continue doing better. Um, I'm just gonna leave that kind of rhetorical. I have no opinion about it. I still think Nvidia is absolutely the best company right now. We have CRM, which is Salesforce, very, very important in determining overall consumer sentiment. So I will be interested in the earnings. I'm not going to be trading the actual symbol though. We have Snow. Many people trade Snow. It's a tech company. Not something I'm super interested in at all, but I do know that many like to trade it. There is IonQ, so I'm assuming we have Rigetti sometime this week. Um, I have almost zero faith in quantum computing right now. I did talk about that in the last live stream. Anyone's interested in me going over my actual opinion on that, I could talk about that in a video. Just let me know in the comments. And on Thursday, we have Celsius water, or whatever that energy drink stuff is in the morning. Some people trade that, so that's that. We have QBTS, which is D-Wave. I'm not interested in quantum at all. In the after hours, we have Rocket Lab, SoundHound, Dell, CoreWeave. I do know that CoreWeave just had a major NVIDIA deal, I believe, just pulled from them, if I remember correctly, from last week. So that could be potentially, if I could actually circle back around to the proper symbol, potentially that could be a pretty nice earnings to trade this week. Um, I haven't done the technical analysis, but again, potentially that could be a really nice buy or, a really nice continued short. We have Zscaler. This thing has absolutely been taking off. Well, I guess I actually pulled back a little bit. It was all the way up at the 300 range. I was looking at it at the $80 range, so it's nice to see that, it did fly. But again, mainly this week, it's NVIDIA. I do have a little interest in Dell, but overall, Dell can kind of do whatever, and they're still going to be a good company. Salesforce, I'm interested in hearing about the overall consumer sentiment. Snow, I don't really care about. And yeah, that's the earnings.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, as always, let's ensure our daily time frame, moving averages, and Bollinger Bands are turned on so that we can, properly go over the technicals. Now, on Friday, we did have a fairly large close. I didn't think we were going to have that push upward in the end. Just to kind of really go over this really quick. Um, I saw this large push upward, okay, and I was seeing a lot of signals that was telling me that very, very likely we're going to see a very large push downward. Um, I was expecting that to happen a lot closer to this range. I did have a few 0DT puts for this, which did not do well. The earlier in the day ones did very, very good, but those later in the day ones did not. However, I was seeing a lot of weakness within the yen. I was seeing a lot of volatility still climbing. So I was really looking forward to a very large push downward. We had the news with the tariff. It did cause quite a bit of buying during the session, but so far we're seeing the overnight selling off just a little bit. With that said, I kind of just wanted to preface this is that on Friday, excuse me, I was expecting, continued weakness because we've been seeing continued weakness for a long period of time now. And with that said, okay, and the reason why I'm really bringing this up is because we're very, very close to having an extremely bearish crossing occurring. And what that crossing is not just having the 5 mile pulling underneath the 50 mile, but having the 10 mile pull under the 50 mile. and having the 20 mall pull under the 50 mall. Now, on Thursday's session, we had that 5 mall test, and I discussed how very likely that was a full 5 mall test. We tested the very bottom bounds of the 5 mall all the way to the upper bounds. On Friday, we had the news in the morning plus the tariff news. Um, we pulled all the way up to the 20 mall, and then we started to reject. We got very close to the 20 mall towards the end of the day, but we still closed underneath it. Doesn't look like that currently, because we did start buying up towards the end of the day. But I do consider this basically closing underneath that level. With that said, the 20 miles at the 689.12. We did close at 689.43. The reason why I'm saying it barely closed at that level is we barely pushed that last couple of cents during the last minute or two. Um, really wasn't something that was a very strong close. It was a very weak close overall in terms of the day. Now, the 5 mont, because we did have a fairly, I call it weak, but overall the market was still up almost 1%. So, um, the 5 mile will be pulling up very, very likely towards that 686.30 range towards the open. So with the overnight being at 684.77, technically we're back underneath the 5 mile again. If we start pulling downward, then what is underneath this 20 mile range and the 5 mile range? It's the lower Bollinger. And I talked about this exact move last week, how we can test the 5 mile. We can head up to the 20 mile, reject that, and pull back downward. If this bearish trend is going to continue. Now, again, this overnight price action does not mean a lot, but we really don't have much data tomorrow. We have some data on Tuesday, and then we have NVIDIA earnings on Wednesday. So if we see continued selling from here, just based on where we're going to see the 5 mile opening tomorrow, the 5 mile will still be below the 10 mile. It will still be below the 20 mile and still be below the 50 mile. The 20 mile should be pulling downward slightly, and the 10 mile should be pulling downward slightly. So those levels are starting to still consolidate downward while we're still seeing the 50 mile slightly pulling upward. So this is really alluding to kind of that price action we saw in February and March, where we started seeing the moving averages get extremely, extremely bearish. Let me go to the actual correct time frame. When we saw the moving averages start getting extremely bearish up in here, we saw the 5 mile cross the 50 mile, we saw the 10 mile cross the 50 mile, and then all of a sudden we saw the 20 mile cross the 50 mile. And that's really when the market started to just drop down. From that 20 mile crossing the 50 mile, that's when we saw the market push into the 100 mile or the 200 mile range. Now, many might assume that the 200 mile is very far away. And it seems like that. However, we have this very large gap right here, and generally I would pull up the drawings right now, but I'm trying to save something for a couple minutes from now, so we'll see that in a moment. But there's a very large liquidity gap at this basically 650 range. It's at this 648.93 range. Well, we have a couple things that run right in tandem with that. So we have the 200 mall, which is currently right at the 648.59. So only, you know, 30-40 cents underneath that current range. So if we start having that price action downward, testing that 200 mall for that liquidity downward would be perfectly reasonable. That would turn into a very large inverse cup. So completely something that can occur here. Okay. Something I also wanted to show is that, as pointed out, this is that on the monthly time frame, we have the 10 mile currently at the 655. Well, with the 200 mile being at the 648 and some change, that's really pretty much right at that same level. Um, it's been quite a while since we've seen the 5 mile test the 10 mile on the monthly time frame. So it is starting to become time to do that again. And seeing that test happen would correlate almost exactly with seeing that 200-mile range taken. So I am really expecting some major downside to start occurring here if we don't have some absolutely massive buying starting to push up very, very soon. When we have these very large consolidation ranges, what happens is that if we continue trading in this range and we continue trading, is that eventually the 200 mile is going to pull up towards us. The 50 mile is going to be pulling up at this level or slightly higher. Okay. Eventually, this consolidation turns into a bearish market, even though the price of the SPY might be at this 600 something range. Um, the longer term moving averages are starting to consume the price action, and eventually this you know moving average consumption that I call it will turn this market bearish. And with this 200-mile range being very close to this 50 mile, um we're nearing that level very, very, very soon here. If we have a bad earnings from the video, if we start closing this cup down to the 676 range, then we're going to start seeing our 20 mile pulling below the 50 mile, and that's going to be very, very bearish. That's basically the bear trend. The next bear trend from that would be seeing the moving averages pulling below the 200 mile range, which that's extremely, extremely rare. That would be an extremely deep bear market, which that's not what I'm expecting right now. So with that said, before I pull up the drawings, do want to show the ADL is that with this last session, we did have the ADL pull up quite a bit. It was starting to chop in this range, but on Friday with the tariff news, we did see some pretty large buying. I mean, we had a low of 681.73 and we pulled all the way up to the 690, so whole $9 of price action. Um, with that said, time to go over my drawings here. Now, this isn't going to make a whole lot of sense at the beginning, but hopefully we will get through this. Now, I kind of want you to think of these different um, lines as Lego pieces in terms of connecting together. So, for example, if I have, and I want you to ignore this area first, and I'm going to pull out a rectangle just to kind of show what area I'm talking about during what period of time. So it'll be this white area. So this green arrow upward would be one chunk of liquidity, and that would basically be one Lego piece. Now, what I would expect from that Lego piece is I expect a full movement downward of selling to fill that Lego piece out. Okay. So if I build a block upward, I now need to subtract that block. Okay, so we're going to go over this for a moment with that in mind. So we have a very large move upward. We only have half of that block subtracted. Basically, we still have a whole block here. Now, I'm going to mark that with this green arrow. Okay, so this green arrow is going to show that underneath with that yellow arrow, of course, it's going to go underneath. Hold on, let's fix that. We'll make it so this arrow go down here, should go over. Okay, we're not going to do that. We're just going to drag it next to it so that you understand the concept. So basically, there is this block still left over. Okay, we now have this large move upward, which creates a whole new block upward. Okay, so basically we're +1. Now we have the move downward, which subtracts the exact same liquidity. Okay, the exact same movement. We have that block downward, so that's subtracted. We have this move upward, and I am measuring this because it is important to measure, and I'll show exactly why. So we have this block upward. So again, a Lego piece upward, Lego piece downward, the exact same measurement of liquidity. So area filled out, going to the next block. We now have our Lego block pulling upward again. And to the selling side, we have it selling exactly that same block to the downside. So in terms of if there was any Lego blocks here, these two have canceled out, canceled out, canceled out. Okay. That means that overall we have a half of a block that must be filled out, okay, within this whole chunk of liquidity. Now, with that half a block, we also have a half a block built right here. So with these two half a blocks built, and that's what this yellow arrow is trying to represent, is that we have a full move to the upside built potentially. Okay. If we have the move to the upside, okay, that would show that we have both of those blocks built. Now, if we're going to have a downside rejection, okay, that would mean that this block would actually cancel out this block up here again. We'd be left with this smaller block, which now needs a selling block downward. Okay, that's what this yellow or what this blue arrow is for, to represent that. So here's really the expectation is that in terms of liquidity, in terms of structure, this is very, very choppy, but everything has been filling each other out in terms of um what needs to be bought, sold, you know, bought, sold, bought, sold, bought, sold, rinse, repeat, rinse, repeat. The only thing that's left over is this little block right here. Okay. Now this little block can either push us all the way up into that 700 plus range, or it can take us all the way back down this large consolidation channel. And again, remembering how consolidation channels trade is that generally we trade from the top of the consolidation channel all the way back down to the bottom. So truly, my expectation is to pull downward into that consolidation channel, fill out that block of liquidity, and see us break this consolidation to the downside. We have not been seeing a major upward break in this consolidation. Um, each time we pull into this blue block of liquidity, we basically exit almost immediately. This last time, we didn't even have the liquidity to pull into that range. We couldn't even break through the top of this consolidation channel. Again, that doesn't mean this moves out of, out of play, but we couldn't even break over the consolidation channel here so far. It looks like so far a very, very strong rejection of that range, and a rejection of that range continuing downward is going to, push us to the bottom of that channel and potentially break us through it. Now, I do want to show the drawings with the Bollinger Bands here, because Bollinger Bands are showing us that bottom of this channel is definitely opening up. It's definitely present and, we can push it. The lower Bollinger on the daily time frame is at the 678.52. So assuming, the lower Bollinger pushes exactly how a standard lower Bollinger move does, we'd get the day one low closing at the lower Bollinger or below it. Day two, we'd expect a lower low. So with the lower Bollinger being at that 678, we could truly expect basically that 672, 673 range if they don't want to push all the way down below that. Now, that would take us all the way down to the bottom of this consolidation channel. From that, we could have a bounce from there, but you know, we'll talk about that when we actually get to that point. But the downside is really starting to build within this consolidation range. It's really starting to say that the downside potential here is extremely, extremely large. Okay. And we're going to go over some other signals of why I believe that as well. Um, Seeing the moving averages like this is extremely concerning. We basically have to have a very, very large bounce to the upside all the way, and I have to pull up the drawings again, but it has to be all the way above this consolidation range and trading within this white box. And the market has to be staying there to basically pull the moving averages above that 50 mile range again. If we can't do that, then the market is going to turn bearish. So, um, that's the main thing I wanted to go over with SPY, but I did want to take a look at some other instruments really quick. And first, we're going to start with semiconductors. But within semiconductors, we did see that rejection from the upper Bollinger again. And even though this structure overall can be a cup and handle, we are starting to see this handle potentially start to break downward. So if we don't see again some very, very large buying to the upside extremely soon, then this is going to turn into a bearish structure. Rather than being that bullish cup and handle, it'll turn into that double top, which will be, again, that bearish structure alluding to much further downside, at least all the way down to that 323-ish range, which, that's not good at all. If we see that weight lost within semiconductors, that's going to take a massive chunk out of the SPY. With QQQ, we do see a continuation of some of this bearish structure. And of course, my drawings decided to mess up, but as you can see, we are looking for this, you know, inverse cup and handle. I don't know why it's pulling the handle down so far. Um, but basically we do have bearish structure here. We do have that inverse cup, we do have the handle, and we are looking for the nested um, handle on that inverse cup to continue pushing us downward. And again, that would basically take us all the way down to the 680, which is, really alluding to the selling that I'm seeing potentially within the SPY, within QQ, or within semiconductors and everything else. For QQQ and tech, we'd really need to start seeing some of this selling, uh, weight bought up to the upside. So really a lot of weight is on Nvidia this week. Now with the HIG, and I'm going to turn off the Bollingers, adjust the chart, we still have been seeing the credit markets holding strong. Now I know there was the whole event with Blue Owl going under, but really that's not what's going to affect HIG. HIG is really targeting basically the top mags and everything else with some of their debt. So I'm really not too concerned about that, but we haven't seen that major selling within the HIG yet. The ADL has been, actually fairly strong. We also see that within liquid. Liquid, I was actually expecting it to be selling off on Friday. We did not see that. We could see that happen on, again, this Monday if we see some of this overnight selling continue to hold weight. Now, we saw the VVIX on Friday had a pretty decent, it had a weird day. It went all the way to the 108, jumped up to the 114, and then pulled back down to the 108. Now, again, with how the VVIX works, this is still extremely elevated. This is still telling us that the dealers overall are extremely, extremely concerned, and they are positioning, actual insurance premiums into positions to insure against downside. So, um, as long as we see the VVIX above this 98 range, this is continuing to tell us that we're not out of the woods yet. The VIX itself was above the $20 range for quite a while on Thursday and Friday. Did close underneath the $20 range, which overall does tell us that we're not in a, overall bear market yet. But this is starting to really, you know, fit on that range where it's telling us that very, very likely we do, we are going to start seeing that longer period of volatility occur. And this does circle into finally what I want to talk about with TLT. Now, with TLT, I'm going to turn on our ugly drawings for a moment. I apologize, but they are important. We saw from the lower Bollinger move that it became an extremely strong buying opportunity, and so far, it's starting to want to fill that cup to the upside. Now, it hasn't done so yet. The last time we had this move, it kind of, decided to screw us over a little bit because instead of closing that inverse cup or not inverse cup, that inverse head and shoulders that we thought was there, it decided to pull downward and, continue to consolidate and, chop up a lot of our contracts and everything. So just be cautious. I am looking for, again, the entire cup fill to the upside of that 9082. Once we get that, again, as we expect at the top of every single cup, expect some bearish structure, expect the handle downward, and then anticipate the breakout. Now, we are between a very, very large consolidation range. These channels probably do need to adjust slightly just because of the dividends. Um, however, the consolidation range still applies, and we still have to break out of that range prior to um, truly, truly expecting some major upside. Because if we don't break out of that range, um, we could just be sitting within this consolidation for a long period of time. Now, this overall structure is looking very bullish. As you can see, there's that very large cup. There's the handle forming. I really want to see in this entire cup fill before we start taking major positions. Because once this cup fills, that's really going to tell us that we should anticipate a handle. From that handle, really should be seeing a lot of this selling weight filled to the upside. Um, Treasuries have been in a stance where they've really been waiting for the overall narrative and the market and just the whole macro to be in a position to buy. And over the last few trading sessions, we've been seeing absolutely immense buying within the treasuries. So whether it's just some of that you know, that unwinding within the Bank of Japan that's getting ready to occur, or if it's just dealers unrisking overall, de-risking overall. But I do want to show the FXY, which again I do have calls at the 60 strike. I could find it. I'm blind. I apologize. This is embarrassing. There we go. Okay. So with this, and my drawing should still be there, we're going to go to the weekly time frame. Now we'll go to the daily time frame. Let's see if we can fit it all in. I just want to quickly highlight these events. So this was the unwinding of 2024, where in late June, late July, early August, we had the Bank of Japan basically have that major unwinding event that happened until October. This is the event from um, January of 2025 all the way until April of 2025. So that was the major market sell-off during 2025. And now again, we're back at this level where the Bank of Japan really needs to intervene again. This goes hand in hand with a lot of the overall bearish sentiment we've been seeing throughout the market. And really, My anticipation is that we should be seeing the yen, seeing that strength, seeing the Bank of Japan very, very likely intervene. And with that, we've been seeing the dollar continuing to pull downward. It has gained a little strength over the last few weeks, but it has been losing that level. If we see the dollar really start pulling downward, that can be a significant sign that dealers are, starting to really sell off securities and getting cash in hand. And from that, we can anticipate that potentially that could be money they're wanting to have in hand to start buying the yen for that upside. Now, with Bitcoin, um, Bitcoin is continuing on its downtrend, and just to show the Bollingers here, it rejected the 20 ma, and from that 20 ma rejection, it's now pulling into this lower Bollinger again. With that lower Bollinger move, it should close this cup back down to the 60,000 range. Um, just to see if I got any drawings for that. Yeah, that's that inverse cup that we're looking for. And with that inverse cup, this is really working on a very, very large inverse cup and handle overall. On this is the weekly time frame, so holds a ton of weight. Now, we're in an extremely large buying channel for Bitcoin. This is the weekly time frame, and again, I've been charting this thing since I want to say late 2021, early 2022. So this channel has a ton of weight to it. We're starting to near the point where potentially we could see this channel broken. Now, I don't really anticipate that occurring. However, that's a potential. What I do expect to happen is for there to be a lot of buying to the upside. Um, we've been seeing institutions buying Bitcoin for essentially the last 3 years straight now. It's very absurd for them to take it all the way to that 126,000 just to dump it back down. Now, again, this could be all for collateral and liquidity. They could have been pushing a lot of weight in that specifically just to liquidate it. Um, we never know what institutions are truly wanting to do, but I do know that this buying channel has a ton of weight to it. And that means that if we break below this 60,000 range again, it's going to start challenging that channel. If that channel breaks, it's really going to tell us that Bitcoin very, very likely wants some major blood. Okay, because it will be trading within that blue channel at that point. Okay, last thing to cover is going to be precious metals. So let's quickly go over silver and gold. And starting with the silver ETF, and I will go to the actual futures if necessary, but this is going to be fairly short. We talked about how being below this 20 mile range is an extremely, extremely strong buying opportunity. We see the 20 mile at the 79.62, and the overnight is currently at 78.31. Now, I did tell people to buy this at the 65.50. So hopefully some of you are in those positions because you're going to be up basically $15 a share. I did buy some shares at that point and I'm up very, very nice on those right now. Again, I'm extremely bullish on precious metals overall. We're going to be seeing exact same type of chart out of gold. See if I can pull it up. And this is the actual gold futures. So we're seeing this break above that 20 mile range again, which is extremely bullish signal within the actual gold ETF. We're seeing that break above the 20 mile, which again, that's very, very bullish for precious metals. Within the futures on silver, we're seeing the 20 mile being broken above in the actual price action. So again, there's a ton of reasons to be bullish on precious metals. Sorry, I can't talk tonight. but we should see silver fill all the way back up towards that $121 an ounce and start pushing above that. With that said, I've been talking about this with gold for a long period of time. And I know when we pulled down, when we had that major sell off, I want to say it was all the way close to the 5,000 range. Whatever it was at the time, it had that major sell off. And I told people, really buy into this range because this is really when it's going to start flying. Um, if you bought in that range, you'd be up quite a bit. Now, with the major sell off, it did pull down all the way to that 4,400. I did tell people around that 4,600, 4,800 range, start loading up. This isn't going to be sitting below that 20-mile range for very long at all. And so far, we are up quite a bit within the actual gold ETF. I have to check the actual share price that I bought it at. Um, I want to say it was at that 426 range, but I have to double check. I know that I'm up quite a bit in those shares. My silver shares again are almost up $15 a share. The upside on gold, again, my level is this green bar up here, so still have significant weight to the upside. That's a whole $1,200 from our current range, so this should be really holding true with a lot of precious metals. So we should be seeing quite a bit of upside from not just gold, but silver, platinum, palladium, you name it. So, okay, I think we covered the majority of what needs to be covered. So with that said, I'm going to end the video here. I have to wake up in like 4 hours to start the stream, so I'm going to end the video here. Um, take care. I hope everyone's trades this week go well. If you have any comments or anything, make sure you leave a comment. I would love to discuss any symbols or anything that anyone wants to go over. Um, sorry, my brain's just blanking out. It's been a really long weekend and everything. Um, yeah, I think I covered it all. So, going to end it here. Take care, everybody, and I will talk to you either in the live stream or in the video tomorrow evening. So, I will see you in the next one.